There's this very interesting stock that has been on my radar for a while, and it's one of the hottest e-commerce stock, and we've just been buying options on this play nonstop for quite a while. We're going to talk about exactly what this is, and if you've been struggling to catch trades like this, you're going to want to see this. We're up 7K on just one day based off of our trading plan, and it's just a thing of beauty to see the plan that you put in place working out just as you expected. So we're going to talk about that. So real quick though, why should you listen to anything I have to say? Well, my name is Jason Wathe, and I am a random guy on the internet. But this random guy has been destroying the market, the S&P 500 and the NASDAQ, for at least the last 5 years. We're up 741%, while the NASDAQ is up 161% and the S&P 500 is up 124% in that same time span. And this isn't to brag, but it's just to let you know that I do know quite a bit about the market. And one thing I know is that I love helping people understand the market. So I hope you're ready. We're going to jump right into this video. We have a lot to talk about. The stock that's been up like crazy on a tear while the market has been crashing, and also some stocks that I'm interested long term in because we've been traveling quite up for a while. This bull market is probably not going to last for so much longer. It could, right? But there will definitely be pullbacks. And in those pullbacks, I'm going to share with you some of the stocks that I will be interested in if we do pull back. So you're going to want to watch this video all the way through. So with that, let's just hop right in. So the S&P 500 and the NASDAQ were quite down today. The NASDAQ was down 0.28%. The S&P 500 was pretty flat, 0.01% on the day. Lots of things happening right now. We've got the government shutdown, and we've got so much happening. Typically, we know that based off of historical patterns, when the market itself is going through a government shutdown, that typically does send stocks higher. It's just how it's gone and happened in the past. So very interesting to note. Some things have been moving, like this stock in particular. We're up very nicely, and you can see that that stock is Shopify. Shopify up 6.5% today, and in the last 5 days it has been up 13.47%. What is happening with Shopify? So we'll look at the charts in a second, but just so that we can quite simply mention, Shopify has first off received a higher boost to its rating by some noteworthy analysts, and on top of that, those price targets have been increased, and on top of that, OpenAI has also collaborated with Shopify, so this has also impacted this movement and momentum that we're seeing in the stock right now. And if we come over and look at the financials of Shopify, we'll point out some really interesting things to notice as we look at some of these key data points here. As you can see, the revenue and the earnings per share are trending quite higher. As you can see, Q1, Q2 of 2023, we were at these levels here, and we've just been trending higher. Q1 and Q2 were these estimates surrounding the tariff talks, so that was quite a turbulent time for most businesses at the time. So you could see even still though that they beat those estimates, and Q3 as well, we can see that, and then Q3 2025 and Q4 2025, we can see that their estimates are well in line, and they are consistently starting to beat these earnings per share estimates, and you can see that they've surprised on their estimates quite regularly, besides the Q4 2024 and Q1 2025, but those were negligible losses, not even losses, but in terms of the fact that they didn't surprise there, but 21.45% right here from Q2 2025. And then you could also see that the revenues have also been trending to the high side as well. So Q3 2025 and then Q4 2025, you can see an expected 3.43 billion. Just to look at the contrast Q2 2025 reported 2.71 billion. So that's going to be coming in very strongly for the revenue and the financials of this company, Shopify. And you can see again that they've surprised quite consistently here. So it's just a good company to see. If we look at the charts on Shopify, we saw that we had gone up to these levels, 156, and we watched it come down here. We added in our position right down in this level. This is the second time we added, because the first initial time we added around over here, and then the stock jolted, sent up to this level, and we took a dip. We added some more. We came up here. This is where I told the Discord that we would be watching to go ahead and roll out some of our gains, take those gains, and then we would come down here. And if we did come down here, we would get back into the position. And surely enough, surgically and as mechanically as you can see, the market did exactly what we expected, and it went straight back up to these levels. I have been talking about this and been putting my money where my mouth is. As you can see, just a few days ago, 929, 925, we've been buying shares, well, not shares, but contracts of this particular play. I mentioned it in our private group. We will talk about that right here. Mention that if Shop falls down to 141.63, that would be a good entry to trade it higher. So this was also something that I mentioned on 9/18. So we called this out in the Discord quite some time ago. And so everybody in the Discord got real-time alerts on this. So very nice, and congratulations to everybody who took that trade. In other words, we are also doing quite well in our other plays. You can see as well, we're up quite nicely on the day, 967 on this one, 279 on this one, 11,000 on this one, 6,000 on this one. So things are still moving quite nicely, even though this market has been quite a mixed bag of things. So that is nice to go ahead and talk about right there. And before I forget, also mention on 923 that I would be taking some of the gains. As you can see, we're up about 6.7k right here on 923. Said I would be rolling over this trade, taking out some of the gains, and then entering again. So at this point, we were in on this trade for about 2 months. So we took the 6k that the market just handed to us because the setup was just so good. But we took those gains and re-entered, and that's where you saw these recent entries again over here, 925, 925, 929. And then the rest is history. Just a couple of days ago, that's when we entered, and we have this 6.5% leap in the stock price today. We're also going to discuss some stocks that I would be interested in buying if we continue to pull back in this market. The first one will be Meta. A lot of people know Meta, and Meta has been on my radar for a while. I was looking for a pullback, and we got one. So I added some shares and some contracts of Meta. So went ahead and buying this dip right here. Meta has been receiving some news. It has made some acquisitions, and so the market is kind of reacting in this way, but I love it when it reacts because it gives us perfect entry setups, and Meta is a great performing company. Profits, revenue, all of that is all good. It's going to rebound, and I'm not even worried about this play at all. So that's one of the stocks that I will be interested in buying. I'm putting that on your radar right now. Another one would be Amazon. Amazon as well. Amazon is e-commerce, AWS, all of that. It's the giant, and you know exactly what it is, what it does. It's reaching a pretty good support level right here, 219. It's been here for a little bit. I would love for it to drop a little bit lower. If it can come down here, or even to these levels down here, in anything under 200 is, an aggressive buy for Amazon. Moving on, so we talked about Shopify. Obviously, you know my stance on Shopify right now. I'm holding leaps on this So that's one thing I'm going to be doing. Palantir is also an interesting one to kind of think about. If we look at Palantir's charts here, obviously the valuations are sky high for this company, but it is still Palantir, and Palantir is doing well. So I wouldn't be buying heavy for Palantir, but if we do drop steeply like we are seeing that right now, I would be eyeing some entries around some of these levels, so that we could probably take it up back again. That's just how Palantir has been operating. It'll make a new high, dip, and then continue to make all-time highs. I'm not saying I think that it's right, but sometimes you can play with the momentum and trade that momentum if you're doing it right. So that's just something I will be looking out for. Again, not financial advice, just some things that I am watching out for. And then, of course, SoFi, darling SoFi. If you're not buying SoFi right now, I don't really know what to tell you. SoFi is just a company that just continues to beat expectations, revenue, earnings, margins. Everything is looking great for this company, and just having a quick pullback, short-term pullback, and that's all we're seeing right here. So not too bad of a pullback, as we can see for SoFi. If we drop further down, all of that just creates more buying opportunities along the way. And just a quick little lesson here for all of you beginner traders here. If you take the sessions, you get access to me personally. And so one of my students reached out with a quick question, a stock that they were buying. It was Dutch Bros. And so they wanted me to look at it and see what I thought on this stock. So I went ahead and did some analysis, and I got to talk with them. They took one of our 4-session packages. They're only on the second package, so they're complete beginner. So this is just some things that I mentioned to them. It's good that you're digging in, I mentioned, but we've had good lessons on we've had good lessons on technical analysis, but we haven't talked much about fundamentals yet. Remember when I said strong analysis comes from a good mix of the two? So I looked into the fundamentals of this company briefly, and personally I'd lean toward not holding it for the long term. Me personally, that's just what I think, and I broke down some of the reasons why that might be the reasons. But the stock is very expensive compared to what its earnings are. Its P ratio is very high. I think it's about 111. We can see probably right here 111 x. That's extremely high. Now if this was trading in maybe like the 50 to 60 range, then that'd be a different story, but it's not. And that means that there's not a lot of room for mistakes as well, because I mentioned here actually its margins are pretty thin as well. So we talked about all of that. We talked about the debt levels, the fact that the debt of the company is much higher than the cash that they have on hand. So that just gives them a lot less opportunity to do things and make acquisitions or just grow the company and invest in their own company. So that's typically a good giveaway of a poor investment. Not to say that Dutch Bros will stay like that forever, but at this point it's not something that I am interested in personally. So just a little education right there for all of you. And if anybody's interested, we do have the sessions here in the links below. It'll take you to my Tidy Cal. And what we're doing right now is if you book a session, one of our session packages with me, you'll get free access to the Discord for a certain amount of time. And that's a free promotion that we're offering just right now. So you'll get full access to the Discord along with that. And again, feel free to check the free version of our Discord. We also have free consultations as well. 30-minute consultations will break down your goals and see how we can help you get to a higher level. So with that, that's going to bring our video for the day to a close. I hope you guys enjoyed, and I'm wishing you all the best in your investing and trading endeavors. And may all the health and wealth flow in your direction. And with that, I'll see you guys in the next video.